They've gone 25 basis points. Everybody thought 50. This is going to roil the Australian dollar. Let's have a look at what's going on here. Quick check on what's going on with the Aussie, and it's plummeting at the moment. 0.9% down, way smaller than the outsized cut that had been expected here. And there you have it right now. Has.
That's right. How do you rein in that decline in the currency? That is key, because a weaker Aussie dollar will not help the Aussies in countering inflation, which is expected to rise to as high as 7+%. Let's bring in Bloomberg reporter Paul Allen in Sydney, plus our executive editor for Asia Markets, Paul Dobson. Paul, let's get your reaction first.
First reaction, that was a surprise. As you say, most economists were expecting a 50 basis point hike, and we got 25. But to be fair, Phil Lowe, when he gave testimony to Parliament last night, said both 50 and 25 were on the table, and he's gone with the smaller option. But you did note that immediate reaction that we've seen in markets. The Aussie dollar falling quite steeply, now 64.70. We've seen a big move in the 2-year as well. The yield now falling down below the 3 handle, 293 at the moment, and the yield on the 10-year also falling, 369.93. So we're just going to wait on some of these headlines now. I can read them to you as we get them from the statement. The RBA says it remains resolute in its determination to return CPI to target, and we do have inflation still running pretty hot here in Australia. The RBA also says it expects to increase interest rates further in the period ahead, although on the heels of this 25 basis point increase, one would imagine that future rate hikes are going to be of a similar size. Some of the other headlines we have here, the cash rate has increased substantially over a short period, and as you mentioned, there has 225 basis points since May. The RBA obviously deciding that that's enough of the supersized rate hikes for now, opting for that smaller 25 basis point increase.
Let's get to the other Paul Dobson. It is a little bit of a surprise, but not really when you think about it, because Governor Lowe has made it clear he is for smaller rate rises from here.
Yeah, well, that's been the communication, but I think, what was priced in for today would have been one more bigger hike before we start to slow down, and you see that coming out with the 1% drop in the Australian dollar as we're talking. So, the market expressing that kind of weaker view is a very difficult balancing act, right, for the RBA, because it's worried about housing prices dropping so sharply. That transmission mechanism feeds much faster through to the Australian economy than it does for the Federal Reserve, for example, because so many mortgages track the central bank's interest rate that much closer. And so, that would have been one of the concerns. They're talking about, worried about wage growth, kind of if they carry on hiking too fast, is that going to slam down the job market as well? So it is that balancing act. But I think what's really interesting from a global market perspective is, RBA was one of the first to go walking away from the ultra-accommodative monetary policy. So the fact that they're now slowing down in this tightening cycle might be, kind of like that early warning for the rest of the world that maybe we'll start to see slower hikes from here globally.